Hey everyone! Today, we're going to chat about something you might not think about every day but has a huge impact on our cities and economies: commercial real estate. You know, those tall office buildings you see downtown? They're not just for looks, they're a big part of how businesses operate and how our cities make money. So, why should you care about empty office buildings? Well, when a lot of them are empty, it's like seeing a bunch of empty shelves in a grocery store. It means something's not quite right. It can be a sign of bigger economic problems, like businesses struggling or changing how they operate. In this video, we're going to compare what's happening in China and the US when it comes to these office spaces. Both countries have been building a ton of office buildings, but now many of them are sitting empty. We'll look at why this is happening and what each country is doing about it, especially after the pandemic changed the way we work. So, grab a coffee, get comfy, and let's break down what's going on with commercial real estate in China and the US and why it matters to all of us. Alright, let's talk about what's going on with commercial real estate in China right now. Imagine walking through the business districts of Beijing, Shanghai, Shenzhen, or Guangzhou and seeing a lot of empty office buildings. It's like going to a big party and finding the dance floor empty. Something's off. First off, these major cities are dealing with super high vacancy rates. In places like Beijing, about 22% of office spaces are empty. Shenzhen is even higher at 27%. It's not just a few empty rooms here and there, it's like entire buildings are waiting for someone to turn the lights back on. So, how did we get here? A few years ago, China's economy was booming. Cities were expanding like crazy, and everyone was building more and more office space, thinking businesses would fill them up. Developers saw the sky as the limit, and skyscrapers started popping up everywhere. But then, things slowed down. The demand didn't keep up with all the new buildings. It's like they baked way too many cookies and now they're just sitting there, getting stale. Then came the COVID-19 pandemic, which changed everything. Suddenly, many people started working from home. Companies realized they didn't need as much office space as before. So, the demand for office buildings took a nosedive. Businesses downsized or decided to stick with remote work, leaving even more offices empty. Let's throw some numbers at you to paint a clearer picture. Back in 2018, the vacancy rate in Beijing was just 7.6%. Fast forward to now, and it's tripled. In Shanghai, some areas have vacancy rates as high as 50%. It's a huge change in just a few years. And it's not just about empty offices, rental prices are also dropping. For example, in Shenzhen, office rents have fallen to what they were 10 years ago. Imagine paying today's prices for something you bought back in 2014. Some landlords are so desperate to fill their buildings that they're offering space for free if tenants just cover the property fees. So, that's where things stand in China. High vacancy rates, dropping rental prices, and a lot of empty buildings that were supposed to be bustling with activity. This oversupply and the shift to remote work have really shaken up the market, and it's going to take some time to sort out. Now, let's shift gears and talk about what's happening with commercial real estate in the US. Imagine strolling through the business districts of New York, San Francisco, or Chicago and seeing a bunch of empty office buildings. It's a bit like walking through a once bustling shopping mall that's now eerily quiet. Just like in China, major US cities are facing high vacancy rates. In New York, for example, office vacancy rates are hovering around 18%. San Francisco isn't far behind, and Chicago is also seeing a lot of empty spaces. It's a stark contrast to the hustle and bustle these cities are known for. How did we get here? Let's rewind a bit. The US has seen waves of commercial real estate development over the years, especially during economic booms. Developers built skyscrapers and massive office complexes, anticipating a steady influx of businesses. It was like setting up for a big game where everyone wanted a front row seat. But then came the pandemic, and everything changed. Suddenly, millions of people were working from home, and companies realized they didn't need as much office space as they thought. This shift to remote work hit the commercial real estate market hard. Businesses started downsizing their office space or even going fully remote, leaving a lot of offices empty. Let's break down some numbers to see the impact. Before the pandemic, vacancy rates in places like New York were around 10%. Now, they've nearly doubled. In San Francisco, office rents have dropped significantly as well. Imagine landlords who were used to charging premium prices now struggling to find tenants at much lower rates. In Chicago, it's the same story. Vacancy rates have shot up, and rental prices have come down. Many office buildings that were once prime real estate are now looking for tenants. Some landlords are even offering major concessions to attract businesses, like several months of free rent. So, just like in China, the US is grappling with high vacancy rates and falling rental prices. The pandemic has reshaped how we think about office space, with remote work becoming a new norm. The market is trying to adjust, but it's clear that the landscape has changed dramatically. Alright, let's talk about why both China and the US are seeing so many empty office buildings. It's like looking at two different sports teams playing the same game and ending up with similar results. There are a few big reasons for this oversupply and high vacancy rates. First, let's think back to the economic booms. In both countries, there were times when the economy was doing great, and everyone was optimistic. Developers were like kids in a candy store, building more and more office spaces, expecting businesses to keep moving in. It's like baking a ton of cookies because you think there's a big party coming, but then not enough guests show up. Both China and the US ended up with way more office buildings than they needed. Then, the pandemic hit, and suddenly, working from home became the new normal. Businesses realized they didn't need everyone in the office all the time. Imagine if everyone decided to have their coffee at home instead of going to the cafe. Those cafes would be pretty empty, right? The same thing happened with office spaces. The demand for office space dropped like a stone in both countries as remote work took off. But it's not just about remote work. Changes in the market and economic downturns also played a big role. When the economy slows down, businesses cut costs, and one of the first things to go is expensive office space. It's like tightening your belt when money is tight. Both China and the US have faced economic challenges that made companies rethink their need for large office spaces. Now, there are some unique factors in each country. In China, the rapid pace of urbanization and government policies encouraging commercial development led to a lot of overbuilding. Cities wanted to show off their growth with shiny new skyscrapers. But when the economic growth slowed, these buildings didn't get filled up as expected. In the US, the tech industry played a big part. Tech companies were booming and snapping up office space left and right. But when the pandemic hit, a lot of these companies quickly adapted to remote work, and suddenly, they didn't need all that space. It's like planning a huge tech convention, but then everyone decides to attend online instead. So, there you have it. Economic booms led to a building frenzy, the shift to remote work reduced demand, and changing market conditions made it even harder to fill those office spaces. Both China and the US are facing similar issues, but with their own unique twists. It's a complex game with no easy answers, and both countries are trying to figure out their next moves. Let's chat about how these empty office buildings and oversupply are hitting local economies in both China and the US. It's kind of like having too many empty seats at a concert. It affects everyone involved, from the ticket sellers to the performers. First, let's talk about the real estate markets and property values. When you have a lot of empty office spaces, the value of these properties drops. It's basic supply and demand. Too much supply and not enough demand means prices go down. In places like Beijing and New York, landlords are struggling to fill their buildings, and they're being forced to lower rents to attract tenants. This can lead to a domino effect, where even the buildings that are occupied see their values drop because the market is saturated with cheaper alternatives. Then there are the businesses and jobs tied to real estate. Think about all the people who work in this sector: real estate agents, property managers, construction workers, and maintenance crews. When vacancy rates are high and new projects stall, these folks feel the pinch. In Shenzhen, for instance, the construction boom has slowed significantly, leaving many workers looking for new jobs. Similarly, in cities like San Francisco, real estate agencies are finding it tough to close deals, which means less income for everyone from the top agents to the support staff. Let's throw in some real-world examples to make this clearer. In Shanghai, a major office building that used to house big tech firms is now mostly empty. The ripple effect is huge. Nearby cafes and restaurants that thrived on the lunchtime rush are now seeing fewer customers. It's like a bustling market suddenly going quiet. Local businesses suffer, and some even have to shut down because there's just not enough foot traffic to keep them going. In the US, take Chicago as another example. There's a big downtown office complex that's been half empty for months. Property values in the area have dropped, and the building's owners are cutting rents to try and fill the space. This affects nearby property owners, too, who see their own property values fall as a result. It's a tough situation all around. High vacancy rates also mean local governments collect less in property taxes. This can lead to budget shortfalls and cuts in public services. Imagine a town suddenly having less money for schools, parks, or road repairs because the expected tax revenue isn't coming in. It's another way these empty offices ripple through the community. So, whether it's China or the US, the impact of high vacancy rates and oversupply goes beyond just empty buildings. It hits property values, affects jobs in the real estate sector, and even trickles down to local businesses and public services. It's a big web of connections, and when one part struggles, it affects everything else. Okay, let's get into how the governments and markets in China and the US are trying to tackle the problem of all these empty office buildings. Think of it like trying to turn a big ship around. It takes time, effort, and a lot of planning. First off, both countries are looking at converting these empty office spaces into something more useful, like residential units. In China, cities like Shenzhen are already turning some of their vacant office buildings into apartments. This makes sense because there's still a high demand for housing, especially in big cities. It's like turning an empty stadium into much-needed homes. The challenge, though, is that not all office buildings are easily converted into living spaces, and the process can be costly and time-consuming. In the US, similar ideas are being floated. For example, some cities are offering incentives for developers to repurpose office spaces into residential units. Places like San Francisco are pushing for zoning changes to make these conversions easier. It's a smart move because it helps address housing shortages while dealing with empty office buildings. But again, the actual conversion process isn't always straightforward, and it requires significant investment. Next, both governments are trying to encourage businesses to move into these vacant spaces. In China, some local governments are offering tax breaks and subsidies to companies that rent out empty offices. It's like offering a discount to get people to come to your party. These incentives can make a big difference, especially for startups and smaller companies looking for affordable office space. In the US, there are also efforts to make office spaces more attractive. Some cities are providing grants or tax incentives to businesses that take up long-term leases in vacant buildings. Additionally, there's a push to make these spaces more flexible and adaptable, like creating co-working spaces that can be used by multiple small businesses. This helps fill the offices and creates a more vibrant business community. Long-term urban planning is another big focus. In China, the government is trying to better balance the supply and demand for office space by tightening controls on new commercial real estate projects. They're also promoting the development of mixed-use areas where office, residential, and retail spaces are combined. It's like building a small town within a city, where everything you need is close by. In the US, urban planners are also looking at more sustainable and flexible city designs. There's a trend towards creating more mixed-use developments and encouraging public transport to reduce the reliance on office buildings in specific areas. For example, New York City is exploring ways to transform parts of its financial district into mixed-use neighborhoods that include housing, shops, and green spaces. There are some success stories and ongoing challenges in both countries. In China, the conversion of commercial spaces to residential use in cities like Shenzhen has shown positive results, with more people moving into these newly created apartments. However, the scale of the oversupply issue means there's still a long way to go. In the US, initiatives like the rezoning efforts in San Francisco have started to make a difference, but the process is slow, and the cost of conversions remains a significant hurdle. Plus, the market's response to these incentives can be unpredictable, and not all businesses are eager to move back into office spaces. So, both China and the US are working hard to address these issues, but it's a complex problem that won't be solved overnight. They're trying a mix of quick fixes and long-term strategies, hoping to turn these empty spaces into something beneficial for the economy and the community. It's a big task, but with the right policies and market responses, there's hope for a better balance in the future. Alright, let's wrap this up by looking ahead at what might be in store for commercial real estate in China and the US. Think of it like trying to predict the weather. It's tricky, but we can make some educated guesses based on what we know. First, let's talk about market recovery. Experts are mixed on this. Some think we might see a slow recovery as the economy picks up and businesses start needing more office space again. Others believe the high vacancy rates and oversupply are going to be a problem for a long time. It's like waiting for a slow-moving storm to pass. You know it'll clear up eventually, but it's going to take time. In both countries, one of the big questions is how much remote work will stick around. If more companies decide to keep flexible working arrangements, the demand for traditional office spaces could stay low. Some industry analysts say that hybrid work models, where people work part-time in the office and part-time from home, could become the new norm. This would mean businesses might not need as much office space as they did before. Long-term, we might see more innovative uses for these office buildings. In China, the government is already converting some office spaces into residential units, and this trend could continue. In the US, there's talk about creating more mixed-use developments, where buildings combine office space with residential, retail, and recreational areas. It's like turning an old, single-purpose building into a Swiss Army knife of real estate. Another potential change is how offices are designed and used. Instead of rows of desks, future offices might focus more on collaborative spaces and meeting areas. This would cater to teams coming in for specific projects or meetings while still allowing employees to work remotely most of the time. Industry experts also suggest keeping an eye on technological advancements. For example, improvements in virtual reality and augmented reality could make remote work even more effective, reducing the need for physical office space even further. So, the future of commercial real estate in both China and the US is a bit of a mixed bag. There will be challenges, especially with the current oversupply, but there are also opportunities for innovation and new ways of thinking about office space. The key will be how quickly and effectively both countries can adapt to these changes and turn empty buildings into assets once again. It's going to be an interesting ride, and we'll have to wait and see how it all plays out. Alright, let's bring it all together. We've talked about the state of commercial real estate in China and the US, the high vacancy rates, the impact of economic booms and the pandemic, and how both countries are trying to tackle these issues. We've also looked at the potential future for these empty office buildings and what it might mean for our cities. So, why does all this matter? Well, understanding these trends is super important for everyone. If you're an investor, it helps you make smarter decisions about where to put your money. For policymakers, it's about finding ways to support the economy and make good use of these empty spaces. And for the rest of us, it's about seeing how our cities are changing and what that means for our daily lives. I'd love to hear what you think. Have you noticed more empty office buildings in your city? Do you think remote work is here to stay? Share your thoughts and experiences in the comments below. Let's keep the conversation going. Thanks for watching. If you found this video interesting, please give it a thumbs up and don't forget to subscribe for more content like this. See you next time.